has secured felony guilty pleas from the world's largest cryptocurrency exchange, Binance.
Actually, it's Binance.
Binance.
Binance. Largest virtual.
Binance.
Binance. And let me be clear. It's Binance.
Binance.
Binance. Council has discussed crypto regulations and legislations at length, and we have come to the conclusion that instead of regulating, we are going to ape a fat bag each into laptop and pump it to over $1,300,000,000,000,000,000,000,000 market cap. Let's fucking go, crackheads.
Good morning, everyone, and welcome back to another episode of the Crypto Morning Coffee. I got my coffee locked and loaded, ready to go, and we are going to jump right into the charts and right into the action, getting straight to the point. Is the bear market for crypto almost over, right? Is it over? Or what can we expect? Right? That is one of the questions. But I also want to come today from a macro perspective as people that are talking about really, really big cracks in the world order, like Ray Dalio have been posting, as well as we do see some signs out of the broader markets, like the labor market in the US, that shows that something needs to change. And then we also have some data around midterm years from the last times and the stock market regarding those midterm years in regards to returns that could be interesting as well. But first of all, let's look at the Bitcoin chart here so far. This is the weekly chart now. We are extremely oversold, as we can see here, as we've only been in June 2022. And if you look at June 2022, you see that this was basically where we have this sharp collapse into the bear market with the Celsius Voyager crash and so on. And then there was a last final drawdown with the FTX way afterwards, right? But between the 13th of June here and this FTX crash here, there was fluctuation, but there was basically no price change. They are coming from the same level. And if you're looking at this, where we are right now, and you look at this wick, and what we see here, that could be where we are right now. Something like this, which would tell me, first of all, that we should at some point see a counter trend rally, a bear market rally back to the bull market support band, or basically bear market resistance band. Then at this point, right, we have found resistance already once. And that comes down, right? It comes down right now. It sits at 89,000, but of course it is coming down at a very fast pace. So what I could imagine is that we come back and rally to something like 80,000 or so in that time, and then come back down and really form something at this at these moving average supports, where you see in a monthly something between 57,000 and 60,000 to go there over time, right? But however you define a bear market, right? If you would say the bear market starts here with the all-time high, right? The bear market basically starts once the all-time high is in, and then you flush down. You see already here on the monthly chart that we are 1, 2, 3, 4, 5 months in the bear market, right? Whereas here we were 1, 2, 3, 4, 5, 6, 7, 8 months in the bear market until we reached this point. All right, but then another 1, 2, 3, 4, 5, 6 months from that point until we bottom. So when I title the question, is the bear market almost over, then there is 2 dimensions in which we can look, right? If we say we'll take between 6 and 8 months from here, that would put us between August and October until we would bottom. We would actually bottom, right? In plenty of time to buy, right? If we were to say the bear market percentage that we draw down is where we define almost over, then the bear market was almost over here, because here we were at 19,000, and all that happened was that we went to 15,000 and another 4,000 down, right? So from here, if you would pick the major part, another 30%, or if you would take this wick that we already price point that we already reached, it was only a mere 12% drawdown, right? So if we would say we are here and we assume that we go in the absolute worst case from the 60,000 down to the 50. Let's say we go a little bit below that that average, and we really go to like 53 or so, another 10% from that absolute low that we had, right? So that would also be like almost over, right, in terms of prices. But if that's the case, and we are here, then we also can argue that let's take these lowers and just look at these cases, right? You reach this point, everything down here at these levels, right, at those levels or below, is a good buying opportunity, you would argue, right, if you see what's coming afterwards. Because everything in here, even these levels above, have led to a 6.3x on the invested capital, right? Even if you were to say the entire bear market trough, including coming out, right? Going here, buying is as good as when it comes out. The break above the bull market support, but even there, it's still worth buying it. If you extend it, even the dips here, worth buying, right? So technically, you have in this between 26,000 and 15,000. Round about 450 days to buy, right? But the price range was exactly that, right? Was about 10,000 US dollars if you bought the lows here and everything in the trough. So if we would do the same here and we say, okay, we go probably to 50,000 or something like that, something like this here, right? Where you say, okay, everything in that might be worth buying. Then this time has started, right? This time has already started where it might be worth buying, and then it might go until the next year, right? Something like that, where you could say everything in here in this trough is worth buying, but price wise, we might be if you want to see it like this, right? Price wise, it would be similar. To say, okay, we might be more to the end of the downward price action, and now it really comes down to DCA your way into these lower prices, right? Of course, 50,000 would be a great present, and if you see here, actually, let me go quickly to another to the Bitstamp chart that is too cluttered. That 1 second, but without the here, there are very little events, very, very few events where the 200-week moving average gets broken and underperformed, right? So at this average is a great time. You see it here, right? Slides through. This was the only buying opportunity below in 2020. And then from there, even like, if you see it, like this was the only buying opportunity below, but look at that part, ignore the other lines, right? But look at that part here. All this part was still a great buying opportunity, right? and then 5x, even if you had bought only the tops there, only the tops from everywhere here, right? This, you would have made 6x also on that run, right? So that said, this is why I think the price wise, the bear market lows are here, right? Even though we were at 60,000, we could go to 50,000, but we were there and thereabout. As well as here, you see it also, right? Once this flush down comes, there is not much more to do, and then there's the trend rally to the bull market support band, and then the question is, how often do we get resistance at this bull market support band? I hope you can see this here, because this is really cluttered up, and I'm asking myself if we even need all these lines to discuss this. Now, I want to discuss something a little bit more unnerving as well, and that is Ray Dalio came out with this post, and everyone knows he's talking like super high macro on the changing world order, right? And he posts the following. At the Munich Security Conference, the post-1945 world order was pronounced dead by most leaders, and the picture behind it was laid out in the Security Report 2026 entitled Under Destruction, which you can read here, right? If you go to the post, you can read it there if interested. More specifically, German Chancellor Friedrich Merz said, the world order as it has stood for decades no longer exists, and that we are in a period of great power politics. He made it clear that freedom is no longer a given in this new era. French President Emmanuel Macron echoed Merz's assessment and said that Europe's old security structures tied to the previous world order don't exist, and that Europe must prepare for war, right? This is, I mean, if I hear this, I really don't want to be here, to be honest, right? Because that is obviously horrible, right? US Secretary of State Marco Rubio said that we are in new geopolitics era because the old world is gone. So then he talks a little bit about the book, right? He wrote about all these big cycles, principles of dealing with changing world order and so on. But he outlines that these things don't have to be necessarily military conflicts, right? So let's check quickly here. There are 5 major kinds of fights between countries. And we are seeing this already, right? I mean, we already had a trade war. So the first iteration, or the first thing that is going on between countries, is trade and economic wars. Conflicts over tariffs, import, export restriction, and other ways of damaging rival economically, right? We saw this between US and China, but then we also saw it between the US and several other countries in the world that did not do what the US's president expected from them, right? So we saw tariffs on top of their of the economies, and backing out of, or going out, retreating from trade agreements. Then technology wars, conflict over which technologies are shared and which are held as protected aspects of national security. We are seeing this also in the realm of AI, of quantum computing, and so on. There is major spying going on, right? So industrial spying. There's wars about compute power, about energy, and so on, and that will, in my opinion, only intensify, right? Then you have geopolitical wars, and these are not the wars where you fire shots, but conflicts over territory and alliances that are resolved through negotiation and explicit or implicit commitments, and not fighting. So that could be which countries join the EU, or which countries are allowed into NATO and which are not, and so on, right? Also, certain regions where negotiations are going on about a certain strip of land without hot war. And then capital war, conflicts imposed through financial tools such as sanctions, cutting off money, credit, and so on. We also saw that, right? I mean, for example, Western world towards Iran, or towards Venezuela, or towards Cuba, and so on. We saw that already, and it might also intensify. And then we have military wars, and it always sounds like the world is currently at peace and everyone is waiting for a big war to break out. But if we're looking at it from another angle, we can see we have a war already in the center, not in the center, but in the eastern part of Europe, between Ukraine and Russia, and between basically the NATO states and Russia. It's already going on. It's just on a limited territory of land. You have Israel and Palestine. You have I'm forgetting something, but we also, I think we saw some military action from other countries against their neighbors and so on. I'm forgetting what it was, but we saw some things there spiraling out of control, and obviously also US and Iran were very, very close to the brink of the war. So that is the context basically that we are in. And then, yeah, we see here this part, right? Unnerving, all-out wars typically occur when existential issues, ones that are so essential to the country's existence that people are willing to fight and die for them, are at stake, and they cannot be resolved by peaceful means. The wars that result from them make it clear which side gets its way and has supremacy in subsequent matters. That clarity over who sets the rules then becomes the basis of a new international order. So the question is, and this is like, I don't think that we necessarily need to expect this right now in the next 6 months or so. And many people will go on this article and put all the financial stuff that we see right now with the 38 trillion in debt of the US on top of this story, right? And they will deduct that the all-out war situation will happen subsequently already in the next year, whereas this can still drag out for another 10 or 20 years until we reach the situation where stability is there is a new balance, right, in the current situation until this struggle. This doesn't happen overnight, right? I mean, we had this in the 30s and 40s in Europe, right, where it went to outright war. But still, even after the major crash of 1929 in the world, it still took from 1929, from this major crash scenario, until 1940, another 11 years for World War II to start, right? Of course, there was World War I before, and the funny thing is, this may be an anecdote from me that lives in Germany. In Germany, the Germans in the Second World War didn't see the Second World War detached as another world war on top of the first. They called the First World War plus everything that came after it the Great War. So for them, that was one basically line that went through, even though that there was a peace treaty and the Contract of Versailles and everything else in between, right? So yeah, let's see the chat. Also, let's welcome a couple of people. Let's welcome the Rare Hodlers to the channel. By the way, if you want to support me and the effort to come here, let's say before work on the stream in the very early morning and bring some content, then consider at least liking, subscribing, but also consider becoming a Rare Hodler, such as Trucking Hank and G-Money. I'm very grateful for each and everyone who supports this channel in these times. It's a really weird but also interesting time to be alive. I'm really grateful to each and every one of you who is still subscribed. So Jasper Frank, good to see you. Filiak, good morning to you. Dr. Knut, good morning, boys. A long time no see. Could not make the streams, but listened them afterwards. Absolutely fine. I mean, this is still valid in a couple of hours, hopefully. So let's check in. Also, high energy. Good to see you as well. So everyone, Thank you for supporting his channel. Now, this is the broader context that I wanted to bring here. Now, this is something that just came out, and it's really weird. And now we are going into the macro context, right? Of situation that we have right now. Here you can see it. The labor market data, U.S. job numbers came out, and again it was revised down, right? And you see it. We had discussed this also on the channel last year, that the job numbers were revised down. And it's really interesting because the US Fed decides based on job numbers as well, right? So they were saying, hey, we can't lower interest rates because the softening of the labor market is not there, yada yada, right? And the same thing happened in 2024, where also the numbers were wrong by almost 1 million, right? So check this out. In 2023, they revised the data and they were wrong by 306,000. Actually, the unemployment, so the non-farm payrolls, they were down by 306,000, right, this year. Then in 2024, they were wrong by 818,000. Really big diversion, where you could say, hey, but then everything you told about the labor market is not really true. And then now they came out and said 1 million jobs revision in 2025. So like worse. This only happened here, 2008, 2009, that they had to revise it down by that much, right? So that's over 2.1 million jobs wiped from the record in just 3 years. Jobs that were reported as created never existed. Zoom out further and it gets worse. Over 2.5 million jobs have been erased from official data since 2019. Negative revision in 6 of the last 7 years. Do you notice a pattern? For perspective, the combined revision during the Great Recession were roughly half of what we've seen in the last 3 years. Now here's 2025 in full. Originally reported 584,000 jobs. Revised number 181,000. That's a 69% reduction. April through December, only 120,000 jobs, 13,000 per month, right? So interesting. Meanwhile, the Fed was making rate decisions based on data that was fundamentally wrong. This is the key, right? Powell himself admitted the BLS was likely overstating payrolls by 60,000 a month. The real question now going forward is how many policy decisions, investment theses, and corporate strategies were built on a labor market that was never as strong as reported. This should concern everyone. And that is interesting, right? And the second part is, when we're talking about the US debt with 38 trillion, we are talking also about where and who is holding US treasuries. And we do see here the US treasury holdings from China that have started out at a value or similar to where we are today. In September 2008, right? And we see this curve here ramping up, and then from basically 2014 onwards, starting to sell off US treasuries, right? So we do see that they have been basically holding 1.32 trillion in US treasury in 2014. And now we are at the lowest level since 2008 crash. This isn't a rebalance or a tweak. It is a mass departure from the American financial system. And we do see also here, right, the countries that are offloading right now are India, Germany, China, UAE, and France. On the other side, we see who's really holding a lot, right? This is the monthly change, right? Or who's unloading, who's buying is UK, Belgium, Saudi Arabia, Norway, and Canada. Interesting, right? very, very interesting. Instead, the People's Bank of China has been buying gold every single month for 15 months straight. Officially, they hold about 82 million ounces worth 460 billion, but the real story is probably much, much deeper. Let's see. Something's wrong, name not green. Yeah, I recognize that. Why is it not green? It should be green. Maybe you're with the wrong account, because usually you were shown as Green Lantern. What do you think about Elon Musk declaring money will be irrelevant in a decade? That depends on what the definition of money is, and I do think that maybe not in a decade, maybe it takes longer, because everything that, like stuff that Elon Musk is saying, it happens, but it takes longer than expected, right? Remember, like everyone driving around with self-driving cars, it's now 2026 and still not happening. And there, if you remember also some of these conferences, people were talking about flying taxis. I didn't see a flying taxi ever in my life, right? So some things are just not that fast. Yeah, let's figure it out. Thanks. Musk says saving for retirement is a waste of time. And I disagree, because if money becomes irrelevant, then the money in the retirement becomes or for retirement and everything else becomes irrelevant. And for sure, holding Bitcoin is one of the safest ways to have some medium of exchange afterwards if things go wrong or if things go differently. But if Musk is wrong and people didn't save anything for retirement, then a lot of people will be in very bad shape, right? And we also see that people don't follow to this, right? This is the stock market. So this has never happened in market history. Retail investors just bought 48 billion in stocks in 3 weeks at all-time highs. And somehow nobody's talking about how insane this is. This is the biggest retail buying spree in ever recorded, bigger than the meme stock era, bigger than the pre-2022 crash buying, bigger than anything. Quick reminder of what happened last time retail got this confident. They bought 33 billion before the 2022 bear market, then sold 10 billion at the exact bottom. Household equity allocation, 45 to 49% of financial assets. For context, the dot-com peak was 40. We know how that ended. The cash on the sideline thing drives me crazy. Sure, money markets hold trillions, but relative to market cap, that ratio is 0.19, the same as 2021 peak. Actual bottoms, that number needs to be closer to 0.35. Meanwhile, Wall Street has been dumping. 31 billion in net institutional selling in April, while retail was buying hand over fist. Make of that what you will. Every single time households have gone this all in on stocks, it's ended badly. Every single time. So here we see it also, right? The US market and then the other markets. The other markets are also up a little bit, but the US market is like insane. That is the reason for that, is that even people in Europe and everywhere are just buying ETFs in the US market, right? So that's why the scales out higher. So this is something to look at, and it's also something that I would like to observe a little bit more, is that we do see this is the Dow Jones, right? It's first of all, RSI wise, it's fairly high already, and it could go way higher, right? I mean, we see this here. It could go way higher, like here, RSI wise. Also because, I mean, we had a bear bull cross here, so this can go on for months, right? Still, we could rally here for months more. But the fact of the matter is, we have seen 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green months in a row in the Dow, right? Nasdaq, same story, only that the Nasdaq is starting to curve, which is interesting, right? And also, if you look at like how far away you are from this 200-week moving average, the 50 MA, this is the 200. We see that at some point, every couple of years, we come back to visit it, right? Here we did it also. At some point, that would be stock market draw down of 20% to revisit it. That's not unusual, and it's also not a big financial crisis market crash, right? But then we also see that sometimes we come back. Let me get rid of this, by the way. This is where Bitcoin was created, by the way. Let me get rid of this. Sometimes we come back and revisit this. And this is rare, but it happens, right? So sometimes, if we zoom out, we come back and visit the 200. And that would be, it's coming up, but that would be a 50% correction. And that is something that is super rare. I mean, the last time was in 2009. But we didn't if you see here, it was 1982, and then here it was 2009, and then it never happened again, right? And we are now basically then 17 years in without this happening. Maybe it's time, right? Maybe it is time. So if you're zooming out, and in any case, you could say, okay, that's like we are on the high RSI side here also for the Nasdaq. We didn't see this in the Nasdaq also since 2008. The Russell small stocks way higher right now, should have ripped crypto up, but didn't, right? German stock exchange also, right? 2020 was the last time, and then here 2011, and then 28, right? So Nikkei, Japanese, way over. I mean, the Nikkei is so high. It could be like, we see also long wicks, right? Lots of selling here. All these markets way overpowered, and I think that's the reason why institutions, central banks, people are piling into gold, because that's what they learned is in these situations where uncertainty is so high and the markets are overvalued and households are FOMOing into that, the smart investors are basically or have been buying gold like crazy. Of course, also for gold, right? At some point there will be a time where gold revisits these upward sloping things. There would be a 50% correction, but still, this is going higher by the day, right? This is coming up by the day. So if we're looking at silver, we did see a back test to the bull market support, but nothing too crazy yet. Maybe silver is already being sold off. We do see it here, but there could be another push. There could be another rally. There could be more uncertainty that goes on, right? So yeah. That is something to keep in mind, I guess. So let's remember all of this, but also let's remember, now I'm coming back to everything I said before, things take time, and if we are closer to the bear market bottom in Bitcoin, which I think is not in yet, I think the bottom is not in yet, but the price downturn is not going to be that massive anymore from here. This is since 1942, buying the S&P 500 on midterm election day generated a median return of 15% through June 30 of the following year, right? So, and this coincides with, because midterms, when are they? Midterm election day, when, let me quickly ask AI when that is. When is it? Okay. The first two, so next midterm, November 3rd, right? That is interesting also, because that would be close to where we estimate the Bitcoin bottom, like Bitcoin bottom being before that. So that means that this post is measuring from November and then all the way through the 7 months forward to June of 2027, right? And from there, from these November, so it will be like here, from this November, we have seen 30% and 3% and 7%, but everything was positive, right? There was not a single midterm where the number wasn't at least, this is the worst of them all during the term of Obama, with 2.54%, but it was still positive, right? So I think that if there is such a crash coming, somewhere between 20 and 50% stock market crash, it's probably coming before, it's 100% in that sense. If this holds true, this paradigm, it's coming before June 2020, way before June 2027, which could mean maybe something will break throughout this year, right? I would say it probably breaks throughout this year. Yeah, and so that means there could be a buying opportunity in the stock market coming up. That might lead to nice, really great returns, right? Because if the stock market is up in general, right, by that, imagine the asymmetric return on when you're buying in the crash. And that is the SPX that they're looking at, which could be either a crash like this or at least like this, right, 26% or so. That thing is returning 20 to 25% annually, right? So if you're buying down here, that would be buying as if you were buying still in April, right? Stuff like that. If this thing comes down crashing much, much more, which absolutely can happen, 56%, that's a generational buying opportunity in the S&P 500, right? To be able to buy these dips, we need to have cash at hand. So the cash ratio needs to be observed. And I know that many people in crypto still have the zero cash ratio approach, where they are always buying with their paycheck, basically, right? And I know why, because there's somewhere is always a buying opportunity, right? Somewhere there's always a buying opportunity. And this definitely, because Bitcoin is returning more than the S&P 500 year over year, definitely also is a generational buying opportunity. So how can we have cash at hand for that many opportunities, right? Either make more cash or don't allocate everything at once. The cash ratio, basically, if we have and I'm guilty of that as well, right? I see this and I want to allocate everything that I have, right? But let's say we have assets like split like this, for example, like everything that you have, and that's let's say that's a 20K portfolio. Then you have 10K invested in, let's just say that's like a standard boomer investment portfolio. If 10K invested in stocks, right, ETF, and then there is 5K in Bitcoin, then technically there should be also 5K in cash, which is not invested. which you can deploy now, right? Over time, which would then look at a reasonable person would then say, I know we are all not reasonable, but a reasonable person would then say, okay, let's take 500 and buy this month BTC on the dip, right? $68,000, let's put 500 here, and then your BTC goes to 5,500, your cash goes to 4,500, and maybe from your salary you can add 1,000 to the cash so that you're 6,500, and then the next month you take 650 and allocate to BTC because BTC is lower and so on, right? That would be what sounds a little bit more reasonable, right? But I know that it's difficult, and to be honest, if I would see Bitcoin go like below $60,000, potentially I would go way harder on this, right? So for me, really the biggest struggle, and I'm telling this openly, is to have this cash ratio at hand. Is really the biggest struggle, yeah, to be quite honest. But also, if we can identify this biggest struggle, then we can work on it, and that is a good thing, right? If we can identify it. If we say we ignore this, then we can't really tweak it. Then we can't really work on it. Bitcoin is back at its cost ratio. I've posted this chart also in the Rare Hodler group a while ago. Cost of production, right? We're not exactly at it. Cost of production right now is 63,627, which is more or less where we should expect bottoms, right? You see it here, bottom was here at cost of production. Here we sliced through cost of production. Here we sliced through cost of production, and here also, right? So not every time, but sometimes we're slicing through cost of production. So we could see another leg down, slicing through cost of production, going to the target of 57,000 or so, right? Defined by power of law, right? Where we do see where the support band is at 53,000, right? That would be more or less the lowest target. We've discussed this in other streams already. Something that is super interesting is this. This, I put it on the thumbnail and I saved it until now. This is the total hash rate in terahash per second. And what we are seeing, this is the yearly chart. And what we did see was the miner capitulation here, right, in January this year. So the hash rate dropped and fell off of a cliff together with the drop that we saw. And now it bounced back, and this is one of the biggest V-shaped recoveries in history for the hash rate, right? And also we did see the hash rate turn around more or less at our peak. And 19th of October 2025 hash rate peaked, and so far it did not come back to this level. But if you see, this happens from time to time, especially in bear markets, right? Let me pull this out here for you. Here the hash rate plummeted, we went to the bear market trough, then came up, crash in hash rate, right? When the price crashes, a hash rate crashes as well, because miners have to turn off their rigs because production cost, exactly what you saw in this other chart, where is it? Where is the, there. This here, right? Here we kind of sliced through it a little bit, and that's exactly where miners are going out of business, right? Either out of business or temporary shutdown. Because just as an explanation, if the cost of production is higher than what you're getting out of it, now producing a Bitcoin and bringing it into the market, then it doesn't mean that you should produce at higher cost and wait for the Bitcoin to value. Instead, you can shut down the mining rigs and take that money that you would have spent on electricity costs and just buy that Bitcoin in the market at a lower price. So, and that is what is happening with miners that still have cash reserves. They do this, they turn off their machines and they buy it in the market at discount price, potentially leading to a bounce, right? Because they're now competing with everyone else in the market to buy the dip. The moment that they are doing this and everyone else is buying the dip, the price shoots up and the miners go back to mining, right? The miners go back to mining because then the price comes back up to 70,000 or so, and they're like, okay, turn on the machines. It's better now to mine than to buy this thing in the market. And that's what we just saw here. I think you see it here, right? We have a downtrend in the hash rate. And this downtrend, that can happen throughout bull and bear, but mostly it's happening in bear market troughs. We see it here, down here. We have a downtrend until we don't, right? And the hash rate turns around and goes into an uptrend, and that's where the bottom comes in, right? The hash rate is already turning up again, and the bottom comes in, right? And this is something we should observe. I think we should keep this. We should observe how the hash rate is behaving over this year, right? And when we are coming up to this level of 100, of 120 trillion terahash per second, right? That would be it. Then we could, maybe it can help us determine a little bit more where the bottom is, right? But we always see fluctuation in that, right? Because there are different miners with different potential in the market, right? So for example, there are miners that don't have extra cash, so they have to turn off the machines until they can go back to business. There are miners that have extensive cash at hand, they turn off the machines, they buy Bitcoin. And also there are miners that are underwater. They have to service operation, they have to buy new rigs. That means they have to sell Bitcoin even at this price to buy new equipment or to service their obligations, right? Maintenance fees, tax, cost of renting of space, cooling, cleaning, whatever, right? There are a lot of costs associated with an operation like that. And there are even machines like TerraWolf, for example, that they have a nuclear power plant to power their stuff. So their electricity cost is cheaper. They probably don't have to turn off. But servicing a nuclear power plant is also expensive, right? So at some point, they also have to invest there, right? So these are all things to keep in mind while watching this. And then, of course, these bear market scenarios that we are in right now, right? This phase is the phase of greatest FUD. Sorry, there it is. This phase is the phase of greatest FUD, and it's also the phase of downward predictions, right? So we have seen I've seen this before, yeah? I have been here, you have been here. We have seen this before. The narrative here also was, by the way, the narrative here was more exchanges are collapsing. Your exchange will collapse, blah, blah, right? We didn't see exchanges collapsing because they probably learned. And the big narrative was Bitcoin is going to 12K, right? So let me tell you this. The current narrative is Bitcoin is going to 40K. That is the narrative. And this time the narrative is MicroStrategy is collapsing. And that's how it will go there, right? And here it was that exchanges like Binance are in trouble and going out of business. Neither happened. Let's keep this in mind. The things that most people expect are not happening, right? Plus, now we are in the situation where everyone is focused on gold and silver, and they are saying Bitcoin is not a store of value, right? people that have said here to sell Bitcoin are saying here that it's not a store of value. Let me get this straight, right? This journey was a 7.6% return, 7.6x return, 667% return from bottom to here. Even people that bought average DCA, right? That bought on average somewhere with a medium a buying price of 34,000 are now still up 98%. So don't tell me that this is not the store of value, right? People that bought before there have a way lower entry. I am DCAing throughout all these times, and my entry is lower than 30,000. Right? So no one can tell me that this is not the store of value. I'm up more than 100% on my Bitcoin, even though that I'm buying, and I've been buying also here at 90,000 and 80,000, right? So it's a store of value that has massive fluctuations to the up and to the downside, right? But it is still capable of storing value as of now, right? Even if it comes back to 40,000, I would have stored value, right? Now, this is, let's get back to this. This is where the FUD explodes, right? This really, when you will see this, when we're coming back down to 60,000, slowly but surely, after maybe even after counter trend rally, the FUD will explode. And here's the combating of the FUD, but no one, like, people will ignore this. Michael Saylor posted this. Our plan is to equitize our convertible debt over the next 3 to 6 years. Strategy can withstand. Official strategy post. And by the way, they cannot post what they want. They are a public traded stock. They have an obligation to inform their investors exactly about what they can and can't do. And if they would put out false statement, that would be a felony, and Michael Saylor could go to jail about this. So this needs to be taken seriously. Strategy can withstand a drawdown in BTC price to 8,000 and still have sufficient assets to fully cover the debt. Converts are fully covered even after 88% BTC price decline. I tell you something. Me and everyone else of the people that believe would, if Bitcoin remotely comes close to this, like 20,000 or 15,000 or 10,000, take everything possible, including a loan probably, to buy a whole coin. Everyone who is not a whole coiner will probably try to buy a whole coin. And there are many people that would do this already at 30,000. I highly doubt that the price will go down that low, right? Which means strategy might be safe here, right? Strategy is safe here, right? So the FUD is out of the window. Now, does that mean that all other companies that follow this, like MetaPlanet and what was it, GameStop and so on, that they are safe as well? I don't know what their liquidation price is. But it's going to be interesting, right? So here we see, let's see the comments on this as well, right? Michael, my entire retirement is in your hands. If your company fails, I will launch myself off a high-rising bucket. That is bullshit, right? I mean, what the heck? You can't do that, right? If the proposition is that you will do something like that, right? First of all, get help straight, right? Call helpline, or I don't know what, because it's never worth doing that to yourself, no matter what happens in life, right? And it's a very sensitive topic, right? Never ever do this. There's always a way, right? But then we see, like, Saylor is challenging the shorts to try to take him down at this point. Spoiler, they can't. You are in a position to recover even from 8K fall. What about people who invested in MSTR and BTC when you were encouraging buys at all-time highs? This is the problem, right? People don't see themselves responsible for their investment. Of course it can go up, of course it can go down, and if you have a product, you will always incentivize people to buy them at the current price in the market, because you're selling a product. MSTR is a product. They are selling. He can absolutely advertise that. It's funny because people don't complain about gas stations incentivizing them to buy gas at, for example, 2 euros the liter, and then a couple of oh hey, welcome back to the Rare Hodler fam. Now we know why it wasn't green. Thank you very much. Yeah, for me, you have never left. Anyway, so people don't complain at the gas station about someone encouraging to fill the tank at a certain level, and then months afterwards it's like 30 cents cheaper, right? They're just happy that it's cheaper now. Why would you be unreasonable and blame the issuer of the product for you buying it at that price, right? That's something I will never understand. So yeah, it would be different if there was complete misinformation, right? To do, like, if you're promising something that didn't actually happen, then but he says, like, this guy needs to get his time horizon straight, right? Because does it really matter in 10 years if you bought at 120k, 100k, or 80k? Yeah, it's weird, right? It's super weird. Like, no one forced him to buy, right? OG Flags, stacking bad. The truth, the whole truth, and nothing but the truth. Yeah, so we do see it's interesting. Another one that I wanted to show you is this. Gold has been falling a little bit in the search terms, whereas Bitcoin has been rising to fairly high levels now in the Google search terms. This is a good sign. I think that most of these search terms still are people that want to understand why Bitcoin did fall so much, and people a little bit stopped researching about gold. We will see if gold continues to rally. Then we'll see it also start rising again, right? But this is interesting search to perform what people are searching for. Now, quick one on the altcoins, and I particularly have one thing. This is the year. On the week, altcoins have recovered a little bit. Not all of them, but many of them. We do see a couple of coins going crazy. I mean, this coin, we are in an environment where we are in a bear market, and still coins like Pippin go to 718 million market cap, which is insane to me. But also we do see Zcash, Tau, and so on doing fairly well. But on a month, of course, if you look at on a month, it's not that big of a deal. It's still, all altcoins are trading on massive discounts still. Let's see. And then we have Ecomi, right? I have one small thing for Ecomi. So Ecomi is down a little bit on the month. We do see it on the week, stable with before, upper part of this channel. Bull market support band is resistance, not that much, but I saw this post and I just wanted to warn everyone on the stacker part to really be careful here. He said, I lost about 10 million OMI tokens bridging between Base and Ethereum. Pathetic. Stacker does not warn you at all about the price differential in the OMI you actually receive. It shows 0 fees, yet the implicit slippage is massive. Omi's low liquidity keeps being a serious problem every time you try to do anything meaningful with the token. So this is crazy because this guy, he did bridge 20 million Omi, and he receives 17 million. So this was not the only value probably, because he said that he lost 10 million Omi, but still, like this 2.75 million Omi lost in the transaction, right? Which is crazy. Yeah, of course you want, if you value the token, then you want to have as much Omi as possible, right? So let's see what is the response here. Yeah, thank you, Trucking Hank. Thanks for making us aware. Sorry to hear this happen. Confident that Stacker will investigate and address accordingly. For context, the integrated bridge on Stacker wallet is hosted and managed by Relay. There has been liquidity provided by Stacker, but the swaps, balancing, and liquidity management is handled by Relay. Among other benefits, the bridge is most useful for users bridging to forego 7-day challenge period when removing tokens from Base onto Ethereum. An issue may arise when a user uses bridge significant amounts from L2 to L1 in a short period, as it takes 7 days for the pool to rebalance in that direction, which is something both Stacker and Relay have no control over. My recommendation is that if you're looking to bridge 100 million plus Omi moving forward, that it's best to utilize the narrative super bridging, as while you are required to wait 7 days, there will never be an issue with liquidity, as it's the native contact and no, not a swap, loan-based model. I hear any updates from myself, blah, blah. Okay, appreciate the reply. Just to clarify, I've already opened a support ticket to Stackers, both you and Dr. Collect suggested, so everything should be properly reviewed on their side. Dr. Collect also says, send a message to our support team. Use the chat button, please. Your Omi are not lost, right? So this is really great. This is good to see. And then we do see, appreciate the response. And honestly, when I bring up negative points, it's not because I enjoy complaining. I'm not trying to attack anyone. Display not correct. You will only pay a minimal fee. Will flag it and so on. So this being solved, but if you have an issue like that, you need to address it also, right? This is why I'm not bringing this up because of any fudding the Omi token or so. On the contrary, I just want to make you aware that this can, like this could happen or could show up to you, and there are potential solutions already here in the chat, right? Yeah, buy all the time. The dip drives my wallet crazy, or better empty. Yeah, exactly. I mean, the prices are low. What I will do in the next weeks, I will bring my Omi also to Stacker. I will also bridge my Omi to that. Then of course I will hold it in that wallet. And yeah, then I'll see. Maybe if I use the Omi, right? I don't know yet. I will also add through the Stacker mechanic to my Omi tokens probably. So some people are also saying like you have to look at the liquidity pool. Yeah. So interesting stuff in my opinion. Let's also look at Vivi. There were going some things ongoing for Vivi. First of all, again, the full migration to Collect Chain has been performed, and I saw a comment on my video that I posted over the weekend that why is there a Collect Chain if there's Ecomi, right? This is the wrong question. Collect Chain is not competing with Ecomi. Collect Chain is what has been done on Immutable X before, and now they're doing this on their own chain, which in my opinion brings the Collect Chain more in the realm of what Immutable X provides to other companies, and hopefully we will see also other companies using Collect Chain in the future, right? Which is apparently the at the objective. Then yesterday the Predator drop has been going out, right? I don't know exactly how this, if there were any like bigger sales going on that, but we have seen this collectible here coming in, and there are a lot of fans also for that, for the Alien and Predator series. Then we also had a new Marvel Mighties drop on February 14th, I think, with giveaways. So yeah, drops are going on. What is that? Eivor Varinsdottir carves the future for the Raven clan with iron. That's a cool looking collectible from Assassin's Creed Valhalla. Here, they're looking nice. So Assassin's Creed series also going on Vivi. And in general, I feel like if you would measure the Vivi prices against Bitcoin, probably they would be positive, because I've not really seen Vivi floor prices drop in a year or so, right? It seems that they have stabilized quite a bit. So I'm excited about 2027 or so, whenever we do see another bull run in crypto, which probably or hopefully then is not only an institutional bid, but rather having crypto people from retail throwing their money not at stocks, but then a little bit more down the risk curve. That is my hope. Anyways, guys, for today, this stream was way too long already. We are on 1 hour and 6 minutes, so I will end it here. Subscribe to the channel, notifications on, consider becoming a rare hodler to support me here. I'm going to fly out to the US today, so there will be no crypto morning coffee during this week, unfortunately, more than today, because I will be in the US, but I will try to discuss stuff in shorter form videos that I will take from my phone. So stay tuned to the channel so that you can get more insights, more content. And wherever you are on the world, have yourselves a great morning, evening, day, night, or afternoon. And I catch you in the next video or live stream. Have a good one, everyone, and bye.